Welcome back, guys. Back in downtown Welland Park today, and things are getting very weird in my market. I'm hearing they're getting weird in other markets in Florida as well. But as you guys know, we have seen a dramatic increase in seller motivated, bring any offers, all kinds of this language in our listings lately, which I think is just sad. Listed below appraised value was another big one I was talking about the other day. All kind of messy, but it's got even worse. I've seen a few now flat out tell you in the listing agreement, not only is the seller motivated, why they have to move. It's just like, to me, is absolutely crazy. I saw one today, seller motivated, already bought another house. What are you doing? Are you kidding me? just price it. I don't understand who that helps at the end of the day. Just price the house appropriately. That's just going to invite lowball offers. Or seller motivated, seller already moved for work. Oh my God, listen, maybe your average layman home buyer or agent isn't going to come in and aggressively try to lowball you, but investors will. Anybody who's bought and traded houses for profit at any point is going to see that and be like, oh, blood in the water. Like, it's exactly what it is. I cannot believe it has got down to that in some areas now, and I'm seeing other YouTubers talk about it in the state. Just mind-boggling to me that not only would you throw your customer under the bus like that, but if they even permitted it, what were they thinking? And in most of Southwest Florida, we've still got two reasons for these crazy descriptions. We still have too much inventory. I'm starting to look now at March for Charlotte County, and we still have over 3,000 single-family homes listed. I'm looking at we sold so many houses. What is going on? We're still listing a lot of houses as well. It has not slowed down. So that was interesting to see. That's one reason that they're putting these things in the description. The other is the interest rate, as of the time of me filming this video, is now 7.5%. And I was up showing homes in Lakewood Ranch today. I was obviously in Welland Park. I was in Golf and Country Club down here. Actually, I'll probably show you guys one of the homes, do a quick tour in this video. And it was Lakewood Ranch. These were new builds. The starting point price was probably $1 million. I mean, with these things on the lower end, with a pool, brand new homes up there, in some communities, you're looking at 1.3 million. There was no shortage of people there, guys. It was a little different story when we came down here to Welland Park, but what I was surprised at Welland Park's Golf and Country Club was the prices from Lakewood Ranch to here didn't seem to be that drastic of a difference. You'd still pay about 1.1 million for a similar house here. Now, obviously, different builders, can't customize things, a lot of stuff in play here, but it also got me thinking, the 7.5% interest rates, people will ask me, well, who's paying that and who's doing this? And it's like, that price point is not affected generally by interest rates. Most people above 700,000 are either going to have a very hefty down payment or they're going to buy cash. So they don't really care about the interest rate. 7.5% interest rates hurt people 600 and under and make it very prohibitive for them to go out and purchase, especially if they don't have at least 20% down. And traditionally that wasn't a problem. When you had $18,000 to put down on a $600,000 house, if your interest rate was 3%, it was fine. It was affordable. But as we know, now that's changed. So you're going to see these interest rates, these fluctuations put a lot more price pressure on those price points than obviously your higher end luxury. And also for the fact that most of the people looking at the higher end luxury have done very well in investments, very well in the stock market, very well in crypto. So that's where you're going to see a big divide on who these interest rate hikes really hurt. And you may not see some price depreciation that you would expect in certain price brackets. The only thing aside from location, guys, that you can't change, and I get pushback on this all the time. I get pushback from people who bought houses 40 years ago. The only thing you can't change aside from where the house is located is what you purchase it for. That is why people get so bent out of shape when they see some of the prices here, that a house is listed for double what it was 2 years ago. they don't want to take on that kind of equity, so-called equity increase, if it's even there, because if it was there, you wouldn't have to put motivated seller in your description. At 7.5%, guys, and I know the date, the rate, the marry the house nonsense, and some people believe that, but look at what has just come out in the past week. You can't count on that. Powell is coming out, pulling the rug on everybody. He's been playing coy all year. Oh, you know, we've got to track the data, and maybe we don't wait until rates or until inflation gets to 2% to start cutting. And now it's like, I'm going to walk back everything. Gas is going back up. Inflation's up. So, you know, I feel bad for a lot of people that got bamboozled by that. And that's another thing that's putting a real aversion on some of our sales down here, is people who would have jumped in and would have dated the rate and married the house, but haven't done so, have now seen that it was all nonsense. That if they had jumped in a year ago, they'd have the same rates. Now, whether you decide if you should have jumped in a year ago and that rate would be better than what it is, who knows what's coming? They're talking about us going back over 8s again. Everybody's got to make that decision. But this is some of the things that are causing massive pullbacks in closings and people buying right now. Not only is it the interest rates and the prices, the uncertainty of everything right now is really screwing up the market. A lot of price cuts going on active listings nationwide, not just here. Here it's worse though. Punta Gorda, the Charlotte County MSA in particular, saw the highest amount, I was told the highest amount of price drops in the entire country last month. Look at this chart from the Fred that I am putting on the screen right now to show you just how severe it was. So as you can see, guys, even though I may be working, I still got my hat in the car. I got the mic, I got the gimbal, I'm ready to rock. Another thing that is shocking me about Charlotte County's inventory situation is we're seeing a ton of houses come off the market because they expired, the owners got pissed off and canceled them, they were withdrawn. Just a lot of homes weekly are just getting pulled off the market for various reasons because they didn't sell. And I'm still watching the inventory stay where it is. It's mind-blowing. It's crazy. It really is. And you look at some place like just north of us, Sarasota County, where I technically am right now, you know, yeah, their sales are down year over year too, but they just hit another all-time high for average sales price in Sarasota County, almost hitting 700,000 from what I saw in the MLS for March. So, you know, just because we have low sales, it doesn't seem to be bringing the price down in some areas. So you have Charlotte County, growing inventory, prices trailing down a little bit, just north of us, Sarasota, complete opposite. Now, I don't throw Northport in there because, again, Northport is Northport, Charlotte, guys. It's in the name. And I think they're going to have an interesting spring going forward. I am seeing, like, as far as price per square foot goes, some of the resales in Northport are blowing my mind. Some of the houses with pools, what they're selling for in Northport, are blowing my mind. Parts of Port Charlotte as well. It seems like in the last 2 weeks, since it's pretty obvious we're out of season at this point. I think someone mentioned on my previous video, you walked around the whole town, you didn't even see anybody. I do try to avoid people so they don't get in the video. I feel bad about taping them, but still, there's a point there. We're out of season. All of a sudden, the wiggle room on a lot of these properties has moved drastically. And some of these sales guys had closed concessions on them too. People had given money towards the buyer towards closing on some things that I thought were unbelievably priced. Now, I don't know the ins and outs of every property. I can't see what happened under the hood, but it's been a pattern I've seen emerging. Also, rentals jumped in Charlotte County in the past 2 weeks. Lee County jumped in the past 2 weeks. Not prices, inventory of rentals as well. So I don't know if this is the final, this is it, season's over, we're giving up. One thing I found interesting, the rep we had down here, great dude, did mention all the condos in this area are pretty much sold out because they're such a good investment. They're so good for investments. They're like $350. And all you have to do is look behind me and you know the answer. These are all the apartments they're also building. Not only, now these are new condos, but not only are they over 3 stories, a lot of them, there's so much competition in the market. I just can't see how a condo at $350 with an HOA, with a potential CDD makes sense. Even bought cash, I don't know, maybe they're banking on appreciation. Maybe they were just talking out of their butt, but it did seem that a lot of them were sold. See, like somebody's coming up the sidewalk now, so I'm gonna stand here like a weirdo for 30 seconds till they walk by. I'm still gonna hold the camera in their face and they're gonna look at me like, what are you doing? But I'm not gonna move, and then I'll walk. Okay, I let them go by. I'm a nice guy. You know what? It's not even the heat in a dress shirt that's killing me. It's the dress shoes. Oh, I'm walking way too far. It's probably a good time to segue into showing you what you can get for about 1.1 million down in Welland Golf right now. All right, guys, so this is the Bogavia model here in Welland Park Golf and Country. 2-car garage, 4 bedrooms, 3 baths with a pool. Let's go. All right, guys, we're gonna speed run this like usual, right through the front door, nice open living area. To the right here, you have a den, office, or 4th bedroom, eating area, coffee bar. Down the hallway here into the other wing, you have your laundry. That's garage access. Your first guest bedroom has pool access with sliders. Also has its own bathroom for a pool bathroom. Guest bathroom here. Second guest room. Can use that. We're going to take you right back out of this wing into the kitchen. Got a nice size island here. And I'll show you another pool access point by the breakfast nook. We're going to take one more spin past the living area and head down to the primary bedroom. You got 2 closets, one on either side here when you enter. Nice high ceiling, pretty open concept. Also have a pool access here. Down to the primary bath we go, double vanities, seating area tub, and of course, dual head showers. All right, now we'll speed back out here to the pool. You got covered seating here. Nice view, nice big cage. And that is your view as you're taking a swim. And there you go, back to your regularly scheduled programming. So I have to wonder now that we are officially out of season here. Are these inventory jumps in the rentals? Are these price drops on the single family homes? Are the closed prices that I'm seeing on single family homes finally the realization that there may be too many housing units out there? Now, builders did just cut back, but they are still offering incentives if they've got cookie cutter products. It looks like the high-end luxury stuff still holding strong because it's selling, because people have the ability to purchase it, and that's what they're doing. And honestly, like we spoke about in a previous video, if you're looking at where you put your money right now, I don't blame you if you're like, well, I'm gonna buy a $900,000 house. It's more than I wanna pay, but who knows if the money's gonna even be worth anything next year. So I sorta get that mentality. I understand why it bothers a lot of people too, but you know, that's where it is right now. So trading in houses like you trade in cars every 4 to 5, 6, 7 years, guys, I think is over for the time being. And what the Fed is saying is kind of just putting more air into that theory for me. I think that's done. That's what's hurt a lot of our sales volume, hurt sales volume nationwide. And people will say to me, okay, well, people are still coming to Florida every day. They are, but not with the velocity we know that they used to. People also can't understand, well, who's paying for these overpriced houses in Florida? It's not Floridians, guys. It's people from up north where supply is still very tight and they can ask whatever they want, get an arm and a leg, get a bidding war, come down here with the proceeds, and lo and behold, in Southwest Florida, oh, we got a lot of options here. So they have the time and they have the money, because people who sell generally have to buy. If you look at the rental inventory and vacancy rates, obviously they don't want to rent, but because most of our purchasers are not in state, as you guys know, the locals are pretty much priced out across the board here. It's a very different ball game. And when people ask me, how can people still be buying at these prices? That's why, because they're coming from places where the prices are even crazier. And we're going to end it where we began. If you guys like this video, give me a like, share, subscribe, and I will see you next time.